We are here to discuss the seismic changes to Federal Reserve policy brought about by Chairman Jerome Powell's testimony before the House Financial Services Committee earlier this week. The result of Powell's remarks and Q&A session has been an about-face for the market, which had for so long been hoping for the Fed to blink in its fight against inflation. The financial landscape has been recalibrated, with traders quickly coming to terms with the increased rate path the Fed is apparently taking. The market no longer expects just 3 rate hikes, but rather a 4th and 5th, with a terminal rate of around 5.75%, much higher than originally anticipated. Powell has to contend with fresh data from this month's inflation report, labor market data, and non-farm payrolls, along with producer and consumer price indexes, over the coming days, which will influence his decision to raise rates. Goldman Sachs economists are still adjusting to the new reality and are sticking to their forecast of a quarter-point hike in March, though are starting to move towards the more aggressive half-point option. With markets already factoring in another 2 rate hikes, some are beginning to worry about the consequences of this more aggressive monetary policy. Federal lawmakers such as Senator Elizabeth Warren and Representative Ayanna Pressley state that the rate hikes will lead to 2 million layoffs and harm working-class families. Powell attempted to push back against such criticism, asserting that inflation is also hurting those at the bottom of the income spectrum. Economists have split opinions on the matter, with some arguing the Fed should accelerate its inflation-fighting strategies with a half-point hike, and others insisting too much tightening could lead to excessive pressure on the market. Joseph Bruswale has noted that Powell is expected to adjust to the data, but should ensure he doesn't push it too far as to break the economy as a result. With the next jobs report this Friday, followed by other key data points next week, the market eagerly awaits to see what direction Chairman Powell will take on the rate path. The Fed's decision this month could have profound implications for the markets in the future, so investors are anxious to know what the decision will be. Will the Fed continue to tighten in order to achieve price stability, or will they be swayed by a softer jobs report and inflation data? We'll know the answer soon.